afternoon, everybody. It's not afternoon anymore. It's night.
9 p.m.
Good evening, everybody. Feels like it's afternoon, Tevis.
You've been streaming all day, bro.
No, I was at the office all day. I started streaming when I got home.
Yeah, you started stealing our intellectual property when you got home.
See, this is where you're wrong, sir.
Hey, you've been warned. Notice has been served. I'm retaining Tim Sweeney. Deal with it.
Listen, you can have fun with that. So before we move on to the show at hand, keep in mind, we are not financial advisors. We are not your financial advisor. Please pause the video and read this disclaimer. Anything we say are our own opinions. Thank you very much. Thank you, everybody, for being here also. We really appreciate it. Tevis, Roy, how are you doing this evening?
Doing good. Always good to be chatting with you chaps.
Yeah, I've been better, but I'll be fine.
How are you, Steve?
I'm doing good. Doing good. Market's doing good. I'm doing good. Still have my coffee in front of me. I'm ready.
All right. So I'll kick off the topic. Basically, the way the show works, guys, is it's not dedicated to fintech. It's not dedicated to SoFi, although next week, I'm sure, whether it's covering earnings or, they have earnings next Friday. So we may talk quite a bit about it, depending on what the earnings look like. And of course, we'll do the live. I think all of us are participating in covering the stock during earnings. But anyway, tonight, what we're looking at is the theme of if SaaS is dead. So the reason why, Steve, go ahead and share my screen, please. And I'll kick through a couple of these just to kind of set this up. You can see this is IGV. It is an ETF that is full of these names. And you can see it's actually down about 17% from its peak in late summer. I guess that was actually September. It's down over the last year in the middle of a bull market. Year to date, it's a little bit too early to tell. Doesn't really matter that much. If you look at performance in the S&P 500, usually SaaS names are at the top of this list, but instead you see, a continuation of some of the names that ran really hot in the late part last year. If you go to the worst performers, and again, it's just been a little while, you see SaaS name after SaaS name after SaaS name after SaaS name after SaaS name. This is a really hated sector. And so a couple of other things too, we can look a little bit more at this chart, but I just kind of want to show you that this has collapsed. The growth adjusted EV over the next 12 months might be a little bit hard to see. Actually, it is going to be very hard to see. Other than, a few certain names over here on the far left is Palantir. That multiple, and as well as most multiples, have really decreased. And so the last thing, I have to stop sharing this and share the tab. Satya had comments on this a little over a year ago. And it was one of those interviews that caught a whole lot of attention at the time. In this, I'm kind of wondering what you guys think, if this explains what we're seeing in SaaS, or if this is the narrative and it's just not true and these names are dirt cheap and they should be bought. Can you throw this up, Steve? All right.
The SaaS applications or biz apps. So let me just speak of our own dynamics thing.
Right.
The approach, at least we're taking, is I think the notion that business applications exist, that's probably where they'll all collapse, right, in the agent era. Because if you think about it, right, they are essentially CRUD databases with a bunch of business logic. The business logic is all going to these agents. And these agents are going to be multi-repo CRUD, right? So they're not going to discriminate between what the backend is. They're going to update multiple databases, and all the logic will be in the AI tier, so to speak. And once the AI tier becomes the place where all the logic is, then people will start replacing the backends, right? We people, that's what. In fact, it's interesting. As we speak, I think we're seeing pretty high rates of wins on Dynamics backends, and the agent use. And we are going to go pretty aggressively and try and collapse it all, right? Whether it's in customer service, whether it is in, by the way, the other fascinating thing that's increasing is just not CRM, but even our, what we call finance and operations, because people want more AI native biz apps, right? That means the biz app, the logic tier can be orchestrated by AI and AI agents. So in other words, Copilot to agent to my business application should be very seamless. Now, in the same way, you could even say, hey, why do I need Excel? Like, interestingly enough, one of the most exciting things for me is Excel with Python is like GitHub with Copilot, right? That's essentially, so what we have done is when you have Excel, like this, by the way, will be fun for you guys, right? Which is you should just bring up Excel, bring up Copilot, and start playing with it, because it's no longer like, oh, it is like having a data analyst. And so it's no longer just making sense of the numbers that you have. It will do the plan for you, right? It will literally, like how GitHub Copilot Workspace creates the plan and then it executes the plan. This is like a data analyst who is using Excel as a sort of row column visualization to do analysis scratchpad. So it's kind of tools you. So the Copilot is using Excel as a tool with all of its action space, because it can generate, and it has Python interpreter. That is, in fact, a great way to reconceptualize Excel. And
all right. So in essence, especially in the front end, he's referring to basically AI eating into the moat of SaaS. SaaS is no longer valuable. The AI can fulfill that function. And of course, this is over a year ago, but it caught a lot of attention at the time. And since then, it's been really since August and September, SaaS has just been in a free fall. So is this coming true? What Satya said, is what he said completely wrong? I'm curious on your guys' thoughts.
Tevis, why don't you go first, because I'm going to have a long-winded statement.
Sorry, you can go first. I'm just finishing up a tweet, and then I'll respond right after.
This isn't time for tweets. We don't.
Go for it, Steve.
We don't. Well, I wanted to build something out, but I guess I won't. I'll do part A and part B. First off, so let's preface this a certain way. Obviously, Nadella knows what he's talking about, okay? Here's the first thing. Dynamics is a SaaS platform. Full stop, period. I've looked at it. And when I say I've looked at it, I didn't just go on their website. Like, I looked at it. I'm not going to go into details because I really shouldn't. But there are so many things that people are getting wrong about this. Now, unless you work for a mid-size or a large-size company in back office, you truly can't understand how the business function is on these platforms. From Workday to Oracle to SAP to Dynamics to, for an ERP system, or if you want to talk human capital management, which would be your ADPs and your Paycoms, or then your CRMs with your Salesforces. There are so many different things that make a company function. Now, Dynamics, when they first rolled it out back in 2017, 2018, had a very low market share. It's slowly been creeping up, and it is now a big 4 instead of a big 3. But Dynamics is still a SaaS platform. It is a true ERP system that marries finance and HR. That's not going away. So I've worked at companies in the tens of thousands of people. The company I'm working at right now is 4,500 people. And there's a 0% chance we're moving away from the platforms we are on. And the people that I talk to, they're not moving away from the platforms that they are on. Businesses need certain platforms. AI is more likely to be integrated into the platforms that they are using than take over and make these platforms worthless. So when you're running a big company, you need your human resource management, which is everything in HR. Brian, why are you laughing? What's going on?
No, it's just I saw a comment. Roy and Tevis will replace Tanner soon. So
okay. So when you're in finance, the suite on these platforms includes accounts receivable, accounts payable, it includes payroll, it includes budgeting, it includes procurement. In those suites, you also have your learning and talent development. You also have your entire stack for HR and performance. These things are essential to businesses. There's a reason why these areas are so big and why everybody from Amazon to Walmart to Microsoft built their own to compete in it, because of how big SAP, Oracle, and Workday are. Those SaaS platforms are not going away. Now, you can argue that you don't like one platform, somebody doesn't like another platform, you hear about AI is going to take over. The reality is that if you're running a company with people, you need certain tools. Those tools are unlikely to be replaced by AI. They're more likely to be enhanced by AI. Now, who's going to be the winners in 5 or 10 years, that could drastically change. The reality is that these companies are still going to need these types of products. Now, maybe it condenses to 2 big main ones. Likely the big 4 will still be there, but SaaS is in an interesting situation because when you look at implementations, and one of the things that I have heard from people in the community is that, well, Palantir, Palantir, Palantir. And I'm like, well, no, Palantir doesn't have an ERP system. They have an ERP system for manufacturing,
Bro,
not for human resource management, not for finance. They don't.
it,
They
it,
don't.
it is like a 2 millimeter shift for
Yeah.
Palantir to develop what is a modern ERP system with
And
their ontology layer on top.
and I am not saying that they will not build one. And I'm not saying that they will not compete in that space.
Mhm.
What I'm telling you is they do not have a product today for it. Because if they did, they would be in every RFP for these platforms.
Okay,
They
well,
don't.
Yeah, there's not like a plug and play platform that you install and you initially customize. But I mean, Palantir is being used to build ERP software for their partners. So
For
there's a.
manufacturing, they're not doing it for finance and HR.
Do you remember?
They're not doing that?
Okay, I've got a clip that I have to show you,
So hold
and
on.
we
let me-
also want to get a reaction from you. You want to go first, Tevis, and then I'm going to show
yeah,
you.
maybe I'll just sort of just chime in 2 cents around that. Look, I think how Satya identified it as just CRUD databases is absolutely the reality, especially in banking infrastructure. It's not been updated. It's like a
Well, Swift Banking Network was built in the 70s. It really hasn't been updated. You're
yeah.
right.
I mean, most of banking is still
It's
built
like
on
archaic.
yeah. It's like on COBOL, you know. So it's just like a series of tables basically, and that runs the entire backbone of the financial system. So in terms of where AI plays in this, I think that there will absolutely be consolidation in terms of the use cases that AI covers, but the real efficiency unlocks are going to happen when you move into a proactive model. There has to be a real incentive for these AI industries to be disrupted. Banking is a dinosaur legacy industry. There's many dinosaur legacy industries. Hell, I was even on in a meeting with someone today who was like, Airbnb hasn't innovated in a while. Airbnb's tech stack is actually way older. It's like 12 years old now. That then like people are actually thinking. I didn't think to me Airbnb was like, oh wow, that's a name you associate with a modern brand, whatever. The point is, the space is moving so incredibly fast, and it's going to move towards consolidation because the use cases that AI covers is so wide. Now, there has to be a real incentive for those industries to be disrupted. Banking, for example, and government, the incentive is not there. They're not, in the government's case, for example, it's not for profit. So the trigger point then is going to be if they can move to a proactive model, right? A reactive model, AI is just a tool. It does things for you, but you still have to prompt it. You still have to be the driver in the driver's seat. And it's a really fast car with a really nice engine, but you're still driving it. Once you shift for it to be proactive, what does that mean? Hyper-personalized predictive analytics across your entire stack of what are your daily workflows. Only at that point can then it truly be augmentative in terms of the efficiency unlocks that you can have for it. And only at that point will you see massive multiple expansion of these large companies when it does become a proactive model. Now, I think there's a lot of companies that are making waves in their respective vertical on the back of AI. But over the next 5 to 10 years, I think you're going to see a consolidation. The companies that are winning in 1 or 2 particular verticals right now are going to enter complementary verticals because it's so much easier to do that than for a company in that vertical, like a Cisco or a Salesforce or it's so much difficult for these people to have that mentality of having a bleeding edge AI platform to completely modernize their stack than it is for Palantir to create an ERP or an HR software or whatever the case may be.
But Tevis, you're talking about 2 different things here. You're talking about actual things running a business, which may or may not be SaaS. because it'd be deployed on servers for certain different things. What I'm talking about is actual platforms that customer-facing people in the business are using. Whereas when you bring up banking, and I agree with you 100%, it's good. Banking is going to be one of the big things that changes over the next 5 to 10 years. A lot of that is not going to be customer-facing. It's going to be on the back end for them building out. When you look, and this is just a CIO, the other ones I have is a CIO. This is Global Growth Insights for the largest ERP systems. The US is 38% of it, but Microsoft is on there, Workday, Concur, which is SAP, Unit4, Oracle, Kronos. God, I remember Kronos. SAP, Epicor, IBM, Cornerstone. Man, Cornerstone's on there. Holy shit. Sage. I used to use that. NetSuite, Youyang and Dimwang and whatever. The other one from the actual CIO report that I found, which is also recent, are the 10 most powerful ERP vendors today. Big Four: Oracle, SAP, Microsoft, and Workday. Palantir is not on these lists, and I'm not saying that they won't go into it. They are a manufacturing ERP system. They have nothing to do with finance and HR. Now, can they build one, and should they build? Roy, have you ever ran an RFP for this software ever?
With Palantir software? No.
No. Have you ever ran an RFP to find enterprise resource planning software?
No, I had two close friends that were in that space though.
Okay.
And so they
So
did talk
I'm
about
in the space. I've ran the RFPs. I've ran the implementations. Palantir was not even on the list.
No,
Yeah.
I don't think that's the point, Steve. Like, we all know that Palantir is not actively going after that market. And what I'm saying is Palantir has a strong nucleus that's backed by AI, the methodology by which they approach their business. We also know that they're a public company and investors are always going to be looking towards multiple expansion to justify the valuation. Now, for Palantir specifically, but also for all these other AI companies. So they're going to be looking to complementary verticals that they can expand into. And
they should. Palantir can probably build just as good, if not a better product. What I'm saying that they are not in the space right now. I never said that they're not going to.
I mean, like out of the box, like another like AIP, Apollo, Foundry Gotham. I mean, it'd be built right on Foundry AIP, but they definitely should do something like that. That's a little bit more plug and play, and then you can interact with AIP directly, make it as modular as you want. But yeah, this right here clip, if you can throw this up, Steve, is from more than a year ago. Oops, let me stop that. I'm sorry. Let me share again. I don't know what went wrong there. Here we go. Nope, that's not. Well, one more time. Not sure why my screen wants to do it. Okay,
Steve,
got it.
On the silence, bro, you're killing me.
All right, so this is from not somebody that works for Palantir, but Associated Materials. And
everything that's in an ERP system, we're doing in Palantir today. So if you're here and you're an ERP reseller, I'm sorry, your time's over.
Not true.
A lot of you guys here I know have legacy systems. You can do more in Palantir in less time than it's going to take you to implement a new ERP system. For us to implement ERP across 11 factories, we're talking almost 5 years. This is less than 9 months work, and we've implemented over 10 business use cases already. We are seeing immediate bottom line results. We're driving on-time delivery. Our customers actually like us. We actually interviewed our customers. The reports went from, oh man, it's like a Ouija board when we order stuff, to, holy cow, they actually deliver on time. It's amazing. We're driving that kind of change.
So what he is talking about is manufacturing. They are a top tier manufacturing. There is no question about that. I said that at the very beginning. They are not in finance and HR. Those are the largest platforms for enterprise resource planning systems, because every company from Walmart to Amazon has to have them. And Roy, I know you work at a place that has a lot of employees. Your establishment must be using either one, an ERP system, or two, piecemealing it out to an HCM/finance combo. The reason that the whole SaaS thing is incorrect is these companies are not moving away from these systems. Now, until a company like Palantir actually takes the other side of the space seriously and builds a system that you can actually offload into quickly. Our implementation took 1.5 years, condensing 8 systems into one. And we had a very large team doing it in addition to consultants. It is, one, not easy to move off these systems. Two, companies really don't want to because it's a waste of time and resources unless your stack is so bad. I mean, moving on to a Dynamics and Oracle and SAP or Workday is amazing for many companies. And I do think that the lower stack eventually will be in trouble, but SaaS as a whole is not going away, at least anytime soon.
Yeah, as a whole, it's not. But I don't think it's a far leap from what Palantir. I know it's a different thing, Steve, but it's not a far leap for Palantir, or really, there's a lot of others out there as well. And I think really the argument is not that SaaS is going to zero or it's going to zero tomorrow or anything like that, but just that the switching cost of going from where they're at to where they want to be is a lot less because of AI. And so we're not talking about like necessarily monetary costs, but if your main thing was like, okay, we hate the software that we're with, which is a common experience, honestly, and they want to switch over to something that really, like, the pain point of exactly what you were saying, like retraining and trying to get everything adjusted, it's just not worth it, even though it's already a headache. I think it'll continue to get easier and easier, and there'll be more and more competition here. And so it's definitely some headwinds. But yeah, like stating that SaaS is dead, I think Satya came out a little strong, especially ironic because we know Copilot is terrible, and Microsoft.
But Copilot and ChatGPT are two different things. Remember that.
So I think
real quick, just to add, Fortune 500 companies that used Workday, look at this list. This is not a dying company by any means.
Yeah, we use Workday at the university, so
SaaS is not dead. Parts of SaaS are going to have serious freaking trouble, but the bigger companies are just fine. And thinking that an overall statement that SaaS is dead is absolutely crazy, because companies like Citibank are not getting rid of their ERP system. It's just not happening. They have 100,000 employees. You have to have it.
Workday is one of the more modern ones, though, isn't it?
It's one of the what?
It's one of the more modern solutions.
Yes, that, Oracle, SAP, and Microsoft Dynamics are the big four.
Yeah. I think the hurdle with these things is the pain of implementation, which serves to increase the switching costs. You do it once, it takes you 1 year plus to implement all your data, whatnot, and then you never want to switch again because that process was so freaking painful. If a solution that's AI powered comes around and can reduce that implementation time to months instead of years, or weeks instead of months, dude, you will see so many people bleed away from the existing landscape. Because I mean, I was talking with Roy on a previous podcast, and I was like, look, I will actively push away every single organization I work with. I will actively push them away from Salesforce because it's a piece of shit software that I absolutely hate with every fiber of my being. But it's the reality. Like, there's no alternative. And so I think a lot of people are in that position where they are vying for an alternative. They're hoping that there is one. And if Palantir or whomever in the future finds a way to integrate data and AI to reduce the integration time, it's game over for the existing players today, because they won't work towards that. They believe they have a monopoly on this space, and they won't work towards improving the product offering. And look, last thing I'll say, yes, I understand the issues with Copilot and ChatGPT and all this stuff today, but like, Roy, I mean, we can play that clip from the Anthropic CEO, right? This dude said in 6 to 12 months, like, it's going to get to the point where right now it's like pair programming with the software engineer, to say like, hey, the engineer is doing some code and it's doing code review, or it's doing code and the engineer is doing code review. And I think that dynamic is going to shift to the AI doing the majority of the coding and the developers doing some monitoring or maintenance and validation after the fact. And once that does happen, like, you're going to see the dynamic shift, right? Because there's compounding effects of these models getting better and better. So a product doesn't exist today, and it might not exist next year, and it might not exist in 2 to 3 years. But the moment that one does exist, it is game over for these existing like
Yeah,
established.
but that's the problem. The problem is the product doesn't exist, and people are acting like SaaS is dead when a product doesn't exist. And all these SaaS companies are building out their own AI to scale their products and retain customers. That's the
Yeah.
problem with the whole freaking methodology. And Salesforce directly, when you actually look at the data, 104,000 companies and change use Salesforce. When you look at the list of companies that use Salesforce, it's pretty much everybody. Amazon Web Services, Spotify, Toyota, BMW, CVS Health, ADP, Intel, Warner Brothers, Coca-Cola, FedEx, American Express. I mean, it's a freaking behemoth. This is a
Yeah, but
behemoth.
that
Like
doesn't mean it's
everybody
going
can
to
say
go forever.
Salesforce sucks,
Iterate or
Salesforce
die.
sucks. But the reality is everybody who's saying Salesforce sucks isn't in a position, they're not a decision maker to get rid of Salesforce. That's why
No, no,
Salesforce
no,
keeps
no.
growing.
That's not the case, Steve.
Of
You're
course
like
it is. Look at their
you're
revenue growth.
no, you're overgeneralizing, man. I
Why?
am a decision maker in a lot of the organizations that I've worked with. Salesforce is the only game in town. Them versus, you know, 2 or 3 that have the same shitty product experience. The alternative is pen and paper. The alternative is Excel spreadsheets, right? And so it's not necessarily that like, oh, Tevis hates Salesforce. Tevis doesn't have agency to change Salesforce. I do. I just don't have a freaking alternative that currently exists in the market. And that's why I'm saying when one does exist in the future, if one does exist, Salesforce is going to bleed like nobody's business. What's that?
That's a big if.
Absolutely big if. I'm not saying SaaS is
But,
dead.
but that's my point. So that right now SaaS is not dead, and this is being
Right.
overblown. That's my
Right.
exact point.
Yes, that's
Nobody's
true.
leaving because there's not another alternative. The same way that people are not leaving Dynamics, Workday, SAP, or Oracle. Like SaaS is not dead. That whole argument is bullshit.
I don't think. I mean, like it should. It being dead, yes. But what Tevis is saying, like, I don't think it's. Well, I guess you can correct me if you're wrong, if I'm wrong on this, Steve. But you're not. You're just saying that the alternative doesn't exist, and when is a question. But I mean, I think it's just a matter of time. Or are you saying
It
there might
absolutely could be a matter of time, but we don't know if it's a matter of time. That's what I'm saying. Like right now, there is not an alternative, like outside of manufacturing, because I can rattle off Palantir's customers from Kinder Morgan to Exxon to BP to freaking Tyson to Cisco. I can rattle them all off. Okay. We know that they have a manufacturing ERP system. That is
We're not talking
different.
about where they're at now, though. It's the future. That's
No,
what's
I
happening.
get that. That is different than what I am talking about. And what I am talking about is when you talk about, not you, I'm just making a generalization. When people talk about SaaS being dead, every company has SaaS platforms that their businesses live and die with. Now, until there is a different product out there and something different than SaaS, now there may be a better product. Palantir may make a better SaaS product in 5 years from now that eats everybody's lunch, but that'll still be a SaaS platform. So that's why I'm saying SaaS is not dead.
I've met people on some of these SaaS platforms that like or love the product. Have you ever met somebody that actually uses on a regular basis that loves Salesforce?
Yes.
I never have met that.
I have met several people.
Somebody that's not a boomer.
That's not a boomer. What's the age of a boomer?
Somebody that's under, I don't know, let's say 35.
No.
Exactly.
No, I'm very transparent with that. Like I've met a bunch of people that love using Salesforce because of all the different things that they can build with it. And it's easy to build with what they say. Now, is it younger people? No, it's people in their 40s and 50s I am talking to. But that's the problem. Right now,
that's true.
You have a cohort of people that have built things out the way that works for them. And it would be very hard to get them to change. Now, younger companies, startups, smaller companies that are being built by 20 and 30-year-olds could have a completely different take. But right now, the software stack for the big companies involve SaaS. Like SaaS is just not dead. Now, there could be a better SaaS platform coming out tomorrow, next year, the year after, but it's still going to be a SaaS platform.
Yeah, SaaS is the wrong categorization. It's all going to be software. We're not going to sell you little hardware devices.
And that's why it's the silliest thing, because sure, the players can change and the companies that are currently winning can go under and lose, but it'll still be SaaS.
Sure.
Unless the entire computing industry changes.
I
That's
don't
just
see that.
semantics. Like, I think like there are modern SaaS solutions. So, for example, I mean, I work at smaller. I've worked at smaller startups and tech companies. One product that I wish I could invest in. I don't know if there's any tech people listening, but it's Linear. Linear is a modern Jira, and Jira,
Oh
Atlassian,
God.
is just a pain to use sometimes because it's like they have every single feature under the sun, but they don't have like a cohesive user experience. But we onboarded onto Linear, and that was a migration that we did. Man, it is night and day. It's like it was built for smaller organizations. I don't know if there's anybody in the chat that's used Linear. So my point is like there are modern SaaS companies that are taking market share from the existing players, and they're built for the younger generation because at the end of the day, I mean, we're talking about 10 years from now or 15 years from now, the people who are in their early 30s today are going to be the people who are like, screw this, I don't want to be on Salesforce anymore. And so while Salesforce might not be dead as a company, I think it's definitely plateaued or at least approaching a plateau and staring at a decline on the other end of it. Now, there's companies that are sort of established laggards that have plateaued for years and years, and they still command a high multiple. They still pay a good dividend. They still are a cash cow. They're so
Let's just define plateaued. So plateau would be what? Revenue flatlining?
revenue growing under 10%.
That's not a plateau. That's still growing. So a plateau would technically be that it flatlines.
I mean, I get what's Coca-Cola growing at? Coca-Cola is
Doesn't
like,
matter. It's still growing. That's not a plateau. It's still growing.
I guess.
I mean, it's not, I guess. It's,
Well,
if you're growing, you're growing.
I think you can say, flatlining is just growing at the rate of inflation. So, but yeah, low revenue, like anything that's under double digits. I mean, PayPal like revenue growth, it's not meaningful. So it does seem like those are the names, or at least some of the names that have retained a pretty strong multiple. I'm curious now, like if we can kind of stay on topic, but shift it just a little bit. So I think we all agree that like some of these names, it's probably overdone in terms of the sell-off. And there are a lot of the SaaS names are being treated like this altogether. So there's some names, and I can bring up this, S&P 500 list again, that you're like, hey, I think that this is very interesting. Maybe it's worth another look. Tevis, you were mentioning one previously that IPO'd, of course, last year. It's a little bit more agile than Adobe, Figma, symbol Fig. So what out of that is like causing you to think, maybe this is actually worth a look at this point? Is it just about the valuation now, or?
I think a large part is about the valuation. I took a look at their Q3 earnings report. I think they're growing 38% year on year, something to that effect. In terms of the product, I mean, it's sort of industry standard across the tech space, at least the tech space that I work at. I don't know for large tech companies, but it's definitely preferred because it's collaborative, right? Like, I think, who was it that asked, either Steve or Tanner, or maybe it was a different podcast, but I would much rather prefer the Google Suite over the Office Suite because it's collaborative. I can just go on Google Sheets and I can work with 10 people at the same time versus
You can do the same thing with Office.
You can do the same with Office. I've never
Office 365. It's all collaborative.
Well, it's also
What are you talking about?
janky as hell.
No, it's not. Have you ever used SharePoint or anything?
I unfortunately have, and I've worked to integrate SharePoint at a company.
It is way better than Google Suite.
SharePoint.
Well, no, you were listening to Matt and I. And Matt and I both said not a single person that we do business with outside of our companies has sent ever anything from the Google Suite. It's all Microsoft stuff. And 70 to 80% of the meetings that we get invited to are on Teams. That's what was said yesterday.
Yeah, no, I get it. They have a network effect. The point that I'm trying to make, though, is the collaborative piece around Figma is something that's interesting. And my thesis around Figma initially was, it's going to get disrupted by AI that can just spit out high fidelity, mock-ups immediately and circumvent the Figma model, they're partnering, with OpenAI, where basically you can do wireframes directly in your LLM, and it will reference you out to a Figma, which is really cool actually, because the more that they deeply integrate with it, the more they sort of create a small moat around themselves. I think that's still to be proven out, the extent to which they're going to integrate with AI. But yeah, I mean, it's getting interesting at these valuations. It's something like I got to listen to their earnings coming up to see what their thoughts are for the next year.
Yeah, I mean, when you started talking about Figma, I didn't realize that it had fallen below 30, and it's been that way for a little bit. That's interesting. Down almost 75% for the past year, but it IPO'd. And it IPO'd really hot. So, Steve, for yourself, is CRM, like if you had to pick one of these that's been beaten down too much, is that the one that you would pick for a rebound to hold for a while, or how do you see this space? Is there a better opportunity out there?
For a rebound, yes. I mean, look, there's two that are being up that are just overdone. The problem is one of them I would be very worried about. So it's Salesforce and Adobe. The one I'd be worried about is Adobe, only because I don't know how AI is going to impact them. Because, and look, my world that I oversee is not the right one to really make the characteristics of Adobe, because we don't do anything that's really high end with editing from the people in marketing. But I could see that there would be AI tools that could replace Adobe on a very simplistic scale. Now, maybe not for high end things in marketing campaigns that other companies are doing, but Adobe has become, it's either the greatest value company ever or the biggest value trap. Like when I put that together with Salesforce, I think Salesforce is going to have more growth than Adobe. But you look at these numbers, Adobe is now a $124 billion company, and their margins are amazing. And you're paying 12 and a half times free cash flow. You're paying under 20 times net income. You're paying 13 and a half times EBITDA at a company that has an EBITDA margin of almost 40% and a free cash flow margin that expands 40%. I mean, like I said, I would be more scared investing in Adobe right now just because I don't know what I don't know with them. But I'm looking at their freaking cash flow statement, and their cash flow statement, they're buying back so many shares. I mean, they just did 11.76 billion in buybacks, which is roughly 9% of the company. So, like I said, this is either the biggest value trap or the best value buy you can get. I think the problem that's scaring everybody is what Tevis alluded to, that when you look at the forward growth, they're expected to do 12% EPS growth this year, 12% next year, and 9%. How much of that is from buybacks being accretive? Because when you look at the revenue growth, it's high single digits. And I think that's what's scaring people about Adobe. So I don't know. Adobe could be a value trap. I think Salesforce is going to surprise people because Agentforce and Data 360 are becoming very big. I think that one has a better chance of turning the corner than Adobe.
Yeah, Agentforce seems like it's not amazing, but I mean that doesn't mean that it's that people won't use it. I haven't kept up with it this last quarter, and I need to actually do that. Underperform even relative to the CEO's expectations. So but I'm not going to push back. We're just sharing our favorites. Fig is interesting, but since you mentioned that, Tevis, I'll mention another, I guess, two kind of. One is Cloudflare, still too expensive. It's come down nicely. I keep watching it, and I'm like, oh man, keep falling, baby. Love to own that name, and I love this. I was looking at it. Yeah,
I bought them at 31 and sold it at 180. One of my buddies who's a CIO at a big company was like, you need to buy this company. I'm like, I don't know anything. He's like, just trust me. He's like, just buy it. So I was like, all right, let's fucking buy it.
Yeah, it's down almost 32% from its peak back in late October. And man, I would love to have it. I don't know that it's going to fall to 120, but I'd love to get it there. Might even buy it earlier too. I just think they're very well positioned. They have a very deep mode. Matthew Prince is an amazing startup CEO guy. A lot of the stuff that's out there as far as the narrative shift to the web, they're just so well positioned on. If I have to exclude them just because like they may not fall to where I'd like. Intuit is I think maybe worth a bit of a look too. It's been caught up in this. It's been sold off massively, and kind of what you said earlier, Steve, where there are some applications and some things that do help with a lot of the services into it, but they're so far away. And Intuit is also innovating at scale, so
and it might be interesting because they're a company where they own QuickBooks, and I believe they own TurboTax, correct?
Yes. Yep.
So Intuit's a company that can expand AI and make those products better and actually potentially put accounting offices out of business. Because why would you need, like in the future, in 5 or 10 years, why would you need to go to an accountant per se if you don't have something that's terribly complex? You should theoretically just be able to upload all your documents to TurboTax and it'd be able to do it for you. So Intuit is interesting.
Yeah, I have seen a few that are trying to make inroads in some Intuit products, but I mean, this is one where, unlike Salesforce, like there are some people that don't love the product. There's some that really do, depending on what the product is. But most people are like at least okay with it. If not, they actually enjoy it. So, and they do seem like they're understanding as far as the shifts that's happening in the space. So they're still growing. Let me pull up actually the growth because I didn't look at that. I did from a couple of quarters ago, but it's not one that I look at quite.
And then can we talk about SoFi after that?
Absolutely, yeah. Yeah, revenue is growing. It looks like 17% year over year, 17.7%, and accelerating actually.
You want to bring it up on screen, Roy?
Yeah, I'll go ahead and do that.
I know it's actually. I'm going to pull something up after we show yours.
Let me do total revenue.
You guys using fiscal AI?
Yeah, it's awesome. So anyway, yeah, you can see there is, of course, seasonality with the business that they have, but you can see that the growth is actually accelerating. We could take more quarters too, but let's go ahead and do that. So yeah, it's not doing what happened during COVID. Of course, they don't have those tremendous tailwinds, but there is an acceleration here, and I like to see that. I think they have capable leadership as well, so. It's one that I hadn't really even ever thought of, except for just briefly one time, ever even becoming an owner in this. But if it keeps falling, this is a very quality name that I think now is probably the time that I need to do some due diligence, or really in a couple of weeks when I get a little bit more time. But it's nice to have this. When the market sells off an entire space, even if the narrative is pretty much true, which. I think at most, we might say maybe it's 75% true. Steve, you'd probably give it a less of a percent. There are names that are not hit by that narrative at all, and so that's alpha. That's the opportunity when they're all getting killed and like, hey, this one's diamond. Don't throw this out. So, but yeah, let's. Any final thoughts on that, Steve, and then we'll talk.
Give me 1 sec. So with Intuit, it's actually fallen enough where it looks pretty damn cheap on a forward basis. So the analyst community is expecting 15% growth for EPS this fiscal year, 14% the following year, and then 15% again the next year. Trading at 23.6 times, going down to 18 times over the next 2 years. But they're not in the single digits, which I think a lot of companies that get in the single digits get punished, whereas it's low double digits, which is interesting because growing at 12.5, and 12.9%. And then are they buying back shares?
I believe so.
They are buying back a lot of shares because this is only what's the market cap on Intuit? It is 152 billion. So they're buying back like 2.83% of the company. What's the balance sheet look like?
Billion? Jesus, what the heck?
What?
This company prints cash.
I would have never expected that.
Yeah, Intuit does really well. So they got 3.3 billion in cash on hand. They only have 6.4 billion in debt. So they're not levered. They have half the debt in cash. And when you look at the free cash flow, I mean, the reality is that they are doing 6.4 billion in free cash flow with very minimal interest expenses. And they're able to allocate a ton to dividends and buybacks because they don't have the interest expenses. So Intuit's very interesting here, actually.
Yeah, well, the other thing with Intuit too that I was thinking about, and we didn't get into, I mentioned to you guys that we could also talk about, which we're not going to tonight, what's happening with AI and also robotics and impacting employment. There were several different CEOs that had very different takes as far as what was going to happen. But
See
Vlad,
Amazon next week.
yeah, we could do it next week. But yeah,
No,
Vlad,
but did you see they're laying off another 30,000?
who was?
Amazon's laying off another 30,000 people
Yeah, so
next week.
Yeah, I think that that's the direction that we go. It'll take longer, and some of these are just blamed on AI as a convenient, blame instead of actual reasons. But no, I think that there's enough to that. But yeah, so there were several CEOs that came out and basically said, no, there's actually going to be a massive job explosion in a good way, and well, I think there's a little bit of truth to that too. So basically, AI has enabled some types of startups and businesses to get off the ground much more quickly, and for those that are entrepreneurs to be able to do something with just themselves or a small team. And even in that type of environment, because I had a small business way back in the day, very different because I was working with hardware instead of software. But we ultimately used Intuit. It was just easy. It was the best tool out
You
there.
use it for QuickBooks?
Yeah.
Yeah.
QuickBooks and
So
a
many
couple other.
people do.
So the payroll product too was actually really nice. And I liked having everything just right there. But anyway, I expect that there's going to be quite a few other startups as well that need to have something like this in addition to having their taxes done. I don't know. I just don't see what they're doing really being that disrupted by AI versus actually maybe even benefiting from a lot of additional startups.
I mean, if anything, what they're doing, they may disrupt everybody with their AI embedded in their products because QuickBooks and TurboTax may get good enough where firms don't need to pay high-end accountants anymore. And they certainly don't have the overhead that accounting firms have.
Yeah, I need to look more into that. So good stuff. Tevis, anything else or SoFi? SoFi? All right.
yeah, they have earnings next Friday. I don't know if you guys had looked at any of these numbers or what, but yeah, just maybe let's chat about it. Curious to get your thoughts. 4 trading days left.
Yeah, it wouldn't surprise me if we see, the run up like we usually do. It's kind of nice that SoFi's at the end of the week. It hasn't been running up. It's been caught up in some of the macro stuff. I've not done specific numbers. I'm hoping to have those probably Sunday, if not Monday. But one, I've already talked about, and I think all of us are on the same page where it's going to be a really, really strong quarter. They're also very much benefited from a one-time payout from Chime as they offboarded from their tech platform. So nice little bump of revenue. They had massive capital raise towards the end of the year, which they likely knew that already that they were going to do. And I expect that they really accelerated lending quite a bit, especially right before the interest rates ended up going away. Plus the loan platform business, they're not as seasonal as, a lot of companies that are exposed towards the Black Friday and Christmas sales. But regardless, I think that they had a very strong quarter. And we also saw the last piece here, Anthony Noto just being a lot more direct, not playing with cards hidden close to his vest, but showing and talking actively about SoFi and the product. Not as much this week, but the previous few weeks of this year. It's very clear that he's excited about something. I think a lot of some things. And I think he would not be nearly as excited if it's oh man, we're going to have a really terrible quarter and they're not. I don't think so. So no numbers yet, but I think classic triple beat. Wouldn't surprise me if we see another leg up after that.
Man, you remind me of the Chime thing right after I actually posted my video. So it was interesting because in their guidance, they have the tech platform being high single digits to low teens. And then when I was doing the numbers, I was 4% is not that. And now it all makes sense because we could see a big payment from Chime in the tech platform. That's really interesting.
Yeah. Let me.
Yeah, man, I think there's a lot to love, right? We also hopefully will get some more idea of what they're going to do with the 1.5 billion or what they're going to allocate that to. And full year guidance, of course, for 2026, not only from a numbers perspective, but hoping on the call we actually get some some details around like the hires that they've been making, for example, from business banking, small business banking. Like we know those hires are active. They've been staffing those roles in December. So hopefully we get something there as well. I'm very excited about it.
What do you expect, Steve?
I'm expecting a big beat. I'm expecting a guidance raise. I'm expecting him to give guidance out at least through 27, maybe 28, because he can't sandbag anymore. He is up against the wall. He has, call it 60 days from when they report to get the stock above either 35 or 45, and then he has to hold it there for another 90. So he needs, I mean, you can expand that timetable out a little bit, but not too much further, only because it has to be at an average of that share price for 90 days. So if he gets it at 40, obviously it'll discount some of the other days, but he can't come into this sandbagging. Otherwise, his PSUs are done for.
Yeah.
And everybody else's PSUs are done for.
Sandbagging is just basically saying, hey, we really think we're going to grow 12%, but we're going to tell you guys we're going to grow 8%.
Yeah, being overly conservative with forecasts.
Yeah,
and
he
that's
can't do it.
I hope you're right on that. It is nice to be invested in a company where you're like, they're always just going to beat and race, but that's because of their guidance being so conservative. I wouldn't mind them being a little bit more aggressive here. I think that it benefits them and it benefits us as well as shareholders. Because I mean, no matter what the numbers that they even guide for, it seems like analysts are like, nah, they're not even going to do that. And it's like, are you not paying attention to the same company? But anyway, as far as the other piece I'm curious about, do you think that they do another equity raise?
But why would they is the question.
I don't know. Other than optionality. I don't think that they would. I don't think that they should. I don't think it would be very well received by anybody.
Well, they did one in July and they did one in December, right? I don't think they're going to do another one in January. Like I think it's way too soon, and the stock is not. Like in December when they did it, we were trading higher than where we are right now, the 27.50. I wouldn't be surprised if they do one in the summer, where basically like, hey, their PSU window has expired and they want to take advantage of the high price or whatever it's trading at, and why not? But I don't think they're gonna, to Steve's point, like do anything to risk the downtrend. Now, I mean, you could argue like, oh, they just don't care about the stock price because they're just going to renegotiate the PSUs, but I don't think that's the case.
Yeah,
I mean, it's going to be hard for them to renegotiate them. I mean, it's not Noto's decision; it's the board's decision.
Of course, it's the board's decision. But what are you going to vote no?
I'm just saying it's not as easy as Noto just snapping his fingers.
No, I know, but like even if they achieve the PSUs, they're going to create a new incentive package. So like either way, the board is going to have to vote.
But it's not a good look if they don't hit these.
Well, I think it's fine if they just hit the 35s, the 45s. That's
I agree with that, but you can't only hit the 25 at this point.
Yeah, and at the end of the day, it's up to the market. So if we see an actual bear market, I don't think that we will, but hypothetically, like so far, I'll get caught up in that. But I actually think it's interesting what you said there, Tevis. Maybe a midsummer, like maybe they're looking at this every 6 months. If they do, what I think that means is they're either doing some sort of acquisition where they can use those funds for that, or that they're doing so much lending that they're like, hey, by the time we get around there, we're not going to be capital constrained, but we could really use that capital to loan. That would be very creative for shareholders, especially in the current environment where there's a large appetite for it. So, but yeah, if they do it like this earnings, people, including myself, are going to be pretty unhappy. And also scratching our head like, you have more than enough cash. What are you doing?
I mean, look, I think people critique them all the time, but maybe I guess I'm just a little bit desensitized to the dilution because I've been holding BM&R for long enough now that like, I think every capital raise that they've ever done has been accretive, right? Even in terms of the debt that they paid off, it shows up in their EPS, like they beat their numbers. I think we as shareholders, if you don't have a 3-month time horizon, then you're very happy as a shareholder, right? Because in large part, they've done their part to execute. Now, the market is the market. I get that. And I'm not saying they're not going to dilute again. They are, but the trust there is that the dilution is going to be accretive. And I absolutely do think that they're going to make an acquisition in 2026 because, I mean, that's the playbook, right? With Technisys, Golden Pacific, and Wyndham, all the acquisitions that they've made so far, right? Like, I think they're going to continue that strategy. I think Galileo was a big bite to sort of digest, and 26 is going to be, back to the plan.
And on that note, I need to cut both of you off. We have some breaking news. The philosophical investor has struck again.
Saw that.
Freaking amazing.
Yeah, he's great. He got the
Freaking
background too.
amazing.
That's awesome.
The philosophical investor does it all the time. Freaking amazing.
It's
Between him
something-
and Spencer, I don't know. AI is getting scary.
Yeah, and something from each of our walls back there. That's like incredible.
Yeah.
It's ridiculous.
Yeah. Steve lost weight by drinking all that milk. That's how it is.
Rick, Robert Kennedy says it's good for you.
Yeah. Oh, all right. So on SoFi still, I guess kind of maybe the last note here, and of course we can talk more, but stock, what's the stock price this time next week when we're doing the podcast for SoFi?
Oh, the day of earnings?
Yeah. So this time next week, market's closed. It's already had earnings.
I don't know, maybe like 30?
30? You sound very confident.
I don't want to go higher than that because people already critique me for being too pumpy.
The nice thing about being a long-term investor is it really doesn't matter. It's just for fun. So Steve, what's your guess?
I don't know. I mean, I bought some naked calls at 20 for 29 on February 6th.
February 6th.
Yeah.
Wow.
A week after earnings.
It's a D-Gen call.
How is that a DGen call?
There's no time on those, man.
Yeah, that's the point.
IV crush.
Yeah, you're going to
That's
get
the point. They're either going up right after earnings or they're not. Like,
I have, you guys will be pleased to know, I have puts at 30 for Feb 13th, and I also have puts at 32 for Feb 20th. So you're welcome.
and you're talking about me being a DGen for buying freaking 29 calls.
Yeah, but my puts have been open for like a month, and I'm already, like I'm tracking well on those. So like even if they go to 28, I can still close those out at a profit.
Okay.
Or Steve, I own more shares like I did on January 16th.
Yeah,
on
but
Friday.
owning shares at 30
Yeah, well, my cost basis was $25.50.
because of how much you generated off of them.
Yeah. It's at $25.50 right, $25.80 right now, so it doesn't really make that big of a deal.
Yeah.
But like, I on those same calls am now writing covered calls for end of February and collecting it on the other side. So like, it doesn't really matter at the end of the day. Like, it's SoFi. Like, I'll happily own more.
Tevis always finds a DGen way to play to do safe plays, so, and I love it. For myself, for price prediction, can either of you guess what my price prediction will be for SoFi?
11.
There you
33.
go. Yeah, it's like on a serious note, I do think 30. It feels about right, given what the stock has been doing recently and what I expect that they're going to post. But I need to take a closer look at the numbers. If I had to choose a multiple 11, I'd say 33. But I think 30 is probably more realistic. But yeah, I'll throw it out there, 33.
Bro,
By when?
What's
I would
it?
love 33 by end of February.
That'd be fucking
Probably
amazing.
30 is about the best we can, but we'll see. Maybe it has a run up into earnings, and the earnings are good enough to justify higher leg up, macros intact. But it would take several things coming together for them to get that. I'd love to see it. So my serious answer is $30.
It really depends on what it does this week, right? In the 4 trading days, like if the macro is good, because we have, I think, an FOMC decision as well this week. I mean, like the consensus is nothing happens, but still uncertainty.
I mean, like the nice thing is consensus is nothing happens. They're not going to raise, so like the only thing is upside.
I mean, I guess.
Well, I guess the downside would be they cut by 50 basis points because like everything's falling to pieces. It's like, okay, that would be terrible.
Downside
That's
would
not-
be like hawkish commentary.
Yeah, I mean, yeah, but I mean, like rate cut probabilities are still looking at not anything before the end of or before the half of the year anyway. When's the first one actually expected here? Let's take a quick look. I'll throw this up so we can look together.
Even FOMC aside, in this geopolitical lens that we're like, you can be at war with 3 countries by this time next week.
Yeah. June 17th, we see the first time where more people than not favor a cut, but it's not by much as far as just the probabilities from CME Group.
So we're all bullish on SoFi for Friday.
I mean, I think you got to be, right?
Yeah. I mean, they have so many catalysts this year, and they're growing rapidly. And right now, the market still is very much in favor of giving a high premium to stocks that are showing not only a lot of growth, but acceleration into that growth.
Look how ridiculous Wednesday is. Microsoft, Meta, Tesla.
Yeah.
Are you worried about any of those three? Because they all have kind of interesting earnings coming up.
Tesla, not Meta or Microsoft.
Well, Tesla, we know it's going to be terrible. I think Meta is maybe even a little bit scarier. You know, if Zuck pounds the table and says, no, we're doubling down on our CapEx expenditure, that stock could continue to plummet.
Zuck is the only thing that can fuck this up with what he says on the earnings call.
The numbers will be good, but it's what he says. Yeah.
Yep. I said that earlier today, and I said it last night, that if Zuck comes out wishy-washy, and if he comes out not having a plan for how they're deploying capital and what they're going to use to compute for, this thing could touch 500. But
Hope it does.
I mean, I don't, but at the same time, I do because I would buy more. But it'd be under my buy price of 550. The thing is, the spread between what normalized and gap is supposed to be is 1 penny, and they're supposed to crush it. And then they'll probably guide high for 26. The numbers are going to be really good. So I think Meta can fly as long as Zuck doesn't fuck up the earnings call.
I honestly hope he does. Because like I own Meta, but I want to own more.
And that's the right attitude. I mean, I don't understand why more people don't want the market to fall. Like you should, if you're a long-term investor, you should absolutely want the market to fall.
Well,
Because then you can just buy more. Like everybody's forced buyers in retirement every 2 weeks. And when people put their investments in for the month or the quarter or whatever they do, if you're as long as you're not retired, if you're 30 to 40 years old, you should want better prices in the market.
Yeah.
So I think there's 2 reasons why people are not that excited when that happens. One is oftentimes they're already fully deployed, that they have no cash, and that what they have coming into the market as far as to borrow from Tevis, net new funds, it's not meaningful relative to the size of their portfolio. So it's a dip, but it's not something that they can actually buy. And the other is,
I'll push back on that when you're done.
And the other is, and you hit the nail on the head, is, if you're a long-term investor, a lot of people think that they're long-term investors, but they're not.
Yeah, like if you're 40, the reality is, unless you do a lot of things right, you're probably not retiring until at least 62. That's just the reality. Yeah, Tevis, it's called healthcare benefits.
Sure.
In the United States, yeah.
In the United States.
You need to be very wealthy otherwise.
Most people are not retiring until 62. Maybe it's the ones that get lucky are retiring at 55. Now, if you're 40 and you have 15 to 22 years left of investing, let's just say you have 500 grand or 300 grand or whatever it is in your retirement account. Sure, if you're maxing out the $1,000 every 2 weeks or every paycheck that you're putting in may not seem like a lot, but when you get a dip, you're buying more and more and more every 2 weeks or every paycheck with that $1,000 if you're maxing out. And over time, that compounds because you're getting more of a dividend every quarter that reinvests. And long-term investors should want the market to be lower so they can just buy more, because ultimately they're going to do very well. And it's just a law of big numbers.
Unless you're in options.
Then you want freaking status quo.
To the moon, baby. No, I mean not selling options, buying options.
Oh, buying options. Then you
Like
want the market.
somebody has on SoFi.
Well, I just need one company to pump, not the market.
Yeah, that's fair. So when are we going all in on BMNU? That's the real question.
I'm glad I'm out of that one.
I gotta tell you,
BMNR?
I had BM&U. I had just 100 shares, and I got slapped. So I exited a few days before the shareholder meeting. No, it was the day that they announced the Mr. Beast thing. I was like,
That is a shareholder meeting day.
yeah. Oh, yeah, you're right. It was before though. It was like in the day. So yeah, not that long ago, last week. But
oh my god, you
BMNR
guys gotta see this. You guys gotta see this.
You made
I need to
another
actually
one?
do this video tomorrow while you're pulling this up. But
No, find yourself someone that looks at you like Jake Hal looks at Elon.
that's awesome.
Amazing.
Yeah, so like BM&R, I think the thesis is still very much intact, but between that, well, there's really three names out of my entire portfolio where I'm like even thinking about trimming some because there's another new opportunity where I'm like, I think that this might be worth a swing, and I need to free up some funds to make it happen. So I'll have to see.
What are you buying, Roy?
He's not disclosing it yet.
What's that?
I said he's not disclosing it yet.
Not yet. Yeah, it's in the drone sector.
Okay.
Yeah, air test systems. I already have my full allocation of VG2. So
Air test is going to zero. It was down 9% today. It's an absolute piece of shit stock.
yeah, it's over.
It's over. It's done.
Oh, did you guys see that I am going silver hunting?
Yeah, I'm actually gonna copy that. I'm gonna go hunt for silver, and I'm gonna name it whatever the fuck you name your streams, and see
Oh
how
my God.
you like it. Okay,
This shit is so heavy. It is so fucking heavy. Oh,
Now you got this from a bank or customer rolls?
I got them from a bank. $50 and quarters. Customer rolled is next. I'm doing both.
Yeah, customer roll maybe get some.
Customer rolled probably has a better probability. I'm doing a test. We're gonna do a box of each on bankrolled, and then we're gonna go in and we're just gonna get as much customer rolled as we can.
Yeah. Retired Dat 42 says people have been roll hunting for decades. It's true, but you still find one, even not trying.
Find them here and there.
I found a dime. It's been a couple of years and it's just a dime, but I found a dime a couple of years ago and I'm like, oh man, it's like 1950 something.
Some people don't even know that the 1964 quarters have silver in them. They just think they're old quarters.
I actually had somebody show me a bunch of like 1967, 68, 69 quarters. I'm like, those aren't silver. Pre-1965. So do they I guess I don't know Canada's money Tevis. Was there a point where they were made of silver and do people like, I'm sure up there, sift through and try to get the silver out of it?
I think it was like earlier than you guys. It was like the 50s or something, but there was a point like 20s and 30s, like it was a lot of silver content, and then it just went downhill from there. We don't have 50 cents though. You guys have the 50-cent coins. So ours is like either the 10 cents or the 25 cents or the 5 cents, which is kind of like the what do you call it? Somebody fucking banging on the wall. What do you call it? Like the notional value, or like the actual dollar value is,
Yeah, silver is. It should have been more obvious, honestly, to me, because I'm well aware of it and how it's being used in industries. And like, okay,
I mean, you and I have
Yeah.
talked about silver several times.
well, yes, but I mean, like, as far as well, I don't know that I would have predicted 100, but
I don't
seeing it
think
move-
anybody would have predicted 100,
Yeah.
but
Well, there's some people out there, but I mean,
There
on
are,
any ticker,
yeah.
like people are like, Palantir's going to 10,000. It's like, come on, like just no. But that's what I felt like when I saw these high silver price targets, and that's not been the case. And it's going to be interesting to see how that, like, if that continues. And there's a massive spread right now too. I saw there's a post today. I think Kobayashi letter maybe had it, where it's the largest spread of prices between the Shanghai exchange for silver and elsewhere, and I think it was up to 12%, which is shocking. So it'll be interesting to see what that does, just because there's a lot that we make. Some in the AI space, like in solar, like there's a ton of silver that's being used there. All these things are going to get a lot more expensive to manufacture. So I'm really curious how that plays out in certain spaces. So if this continues. And there's a lot of other metals that are falling right around. There's been a lot of speculation on copper, which, I mean, I don't really follow this, but I see other people that are kind of tracking these things. It's like, okay, if all of our metals just keep going like this, and a lot of this is used in manufacturing,
It's going to be bad.
Yeah, so let's mine some space asteroids or something. I don't know.
How long do you think it's going to last before it all comes crashing down? Like, when do we buy puts on silver?
The problem is that they're not, the reports that I've read are now saying there's a structural demand issue for several years.
For silver?
Yes.
Yeah, you have
like for copper, but not for silver.
No, for silver.
You have basically several different things that are happening, but the biggest is industrial demand is just spiking through the roof at the same time that consumer demand is spiking. A lot of that because of speculation, and governments that are like, hey, let's maybe think about getting into some of these precious metals and other assets as well, and shifting away from US treasuries. That's happening massively too. So it's like the triple whammy. It's a golden confluence.
I think Bitmine posted around this. They're basically saying like the breakout in gold and silver is why we're seeing a muted demand in crypto, in Bitcoin and others. And I'm like, how correlated are those assets really?
I don't buy it at all. I
Not
think
buying that at all. Because crypto doesn't dictate when anybody builds anything, which would be a main use for different commodities.
it can
It's a different
function.
investor class.
It can function as a hedge or a store of value, but it does so very differently than precious metals. So, and usually those are very different buyers too.
I don't think that that's something you want to do, Tevis. I would
Shorting.
pick something else. I wouldn't play that strategy on silver.
I'll just short Salesforce instead.
You probably have a better chance of doing that at this rate.
Yeah, I think they're in a little bit of trouble, but by trouble I just mean maybe a little bit more compression, and they don't go anywhere for a while.
Like, I wouldn't be surprised if silver goes back down to 60, but with all the fucking craze right now, it could go 125, 150.
I mean, it's not far away. It's year to date, we're at
It's a crazy chart.
43% year to date.
It's a crazy chart.
Yeah, let me throw this up in case.
Yeah.
I'm sure that pretty much everybody has seen this, but this is year to date on a precious metal. Like that doesn't happen. Over the last year, 256%. I mean, you
This
can
was
look at
at
it all
20
time.
a year and a half, 2 years ago. This was at 20 an ounce.
Yeah.
Insane.
Yeah. Well, this isn't the previous all-time high. That goes further back with the Hunt brothers. But yeah, it's wild. And oh man, I really hope that, at some point one of these demands fade and then it's not AI. But if, governments and also individual investors continue speculating and doing this, I don't know. It's gonna. Well, at the same time, like I thought that this was the weirdest thing. So Enphase is not really as exposed to silver just because they're not making panels. There is, I think, some in what they do, but if panels become a lot more expensive because they suddenly don't have access to silver, I don't know that there's a good alternative. I don't think that there is. I mean, that's going to put weight again on the same space. And Enphase is going like this, and I'm like, what's happening? I know that they've had some interesting releases on the commercial side, but I don't know. That's kind of why I like VG a lot. They got the natural gas. It hit above 10. It's a little bit under 10 right now.
Okay.
They ended up having another one of the arbitration hearings go their favor. So there's really just one that's undecided. Shell is appealing, which initially went for VG.
Shell's the one that's undecided?
No, it's one that starts with a G. I can't remember the name right now.
What's going on with the BP one?
The BP one went for BP and against VG, but
that was the smaller one, right? The Shell one was supposed to be the big one.
The Shell one went for VG, and I don't think it's going to be overturned in an appeal, especially because we got this further indication that, you know, this ARB went in favor of them from Repsol. And so I don't know, though, that the BP one will be overturned. Maybe they just have to end up paying that $1 billion, which they can. But, I mean, still, it'd be nice if they keep it. But that's the shift. There's a very brutal winter in Europe, and so they've been talking about a glut of LNG. Well, that doesn't exist in a brutal winter, and so they've actually already imported more now than last year by a lot. January, I think, it broke some kind of record already, and January is not over. And a lot of the imports actually come directly from the U.S. And of course, VG benefits from the spot price between Huey Hub and the European markets. Is it Huey? That doesn't sound right. Hub, whatever it is, it's HH. But anyway, yeah, it's just the easier energy play right now. It's tough. Like solar is so tough. Henry. Okay, yeah, I was like, Huey is not right. So thank you guys. Henry Hub. All right, are you guys ready to go into the after hours?
Yes. Tavis, yeah.
Yeah, that sounds fine.
All right. Well, if you guys are not familiar, we do have an after hours show. It is for live. It'll be up in just a couple of minutes for subscribers only. If you'd like to join us at any of our channels, you'll have the same access to that as well. But thank you guys for your support along this way. It's been really fun interacting with you.
It's the nicest outro I've ever heard. Steve's not even close to turning off the stream.
Yeah, I'm typing for the freaking link. Jeez. All right, everyone. See everybody in a few minutes who's a member of one of our channels. We should be up and running in a couple of minutes. For everybody else, have a great night. Thank you very much. Go follow Tevis. Go follow Roy. Really appreciate everybody being here. Thank you very much.
And go follow Tevis.
Yeah,
I said go follow Tevis.
I said it too.
I did too.
Go follow Tevis. Go follow Roy.
Yeah, follow Steve too.